Okay, folks, welcome to Market Wrap for the 10th. What we're going to do tonight, given the events of today, we're going to spend a lot more time talking about member stock chart requests. I'm going to go through the markets quickly. I'll give you my thoughts about where we've been, where we're going, what's going to happen next. We'll strategize a little bit, but I really want to focus on the names that you've submitted for me to review, so that if you're long of these names, that you have a bit of peace of mind and a bit of second opinion on how to proceed. So let's get to it. Yesterday, we had the first day of trade for the bond market this week due to the Columbus Day holiday. The bond market was closed on Monday. So we closed 2 bips down yesterday. Today, we rallied back by 1 bip. So yields began their ascent yet again. Now, what really appears to be the problem with the markets is that sentiment is finally beginning to play catch up with the technicals of the market. The dollar, another down day today. The dollar, which we discussed last night, as flashing a lot of topping action on both the Dixie and on the UUP, the Dollar Bull ETF. It finally broke today. Now, we did close off the lows of the day, but we also closed off the highs of the day. So this 95.50 level is now going to act as serious resistance. And if you take a look at the Dollar Bull ETF, it too is down. And on a weekly basis, we have a bearish reversal bar at the 25.50 level. So the dollar is beginning to soften up. This is no shock. The market's been sending us signals, and it certainly influenced my decision to go adding to the NUGT trade, and we'll talk more about that in a moment. The TIPS, Treasury Inflation Protected Securities, continue to consolidate. Now, I've been saying that at some point in time, you're going to have the plunge protection team out there, and they are going to spike this market into the elections. As sure as God made green little apples, we are going to get a counter trend rally that will probably last us into the first of the year. You had President Trump, who was briefed by the Federal Reserve today and Treasury. And there's no doubt in my mind that he had them by the wrist and was twisting Jay Powell's arm to do something. And again, Jay Powell need not do anything. All he need do is tell one of the more hawkish members of the Fed, deliver a speech, indicate that December is off the table in terms of rate hikes, and you'll see this market rally. And when we do get that announcement, you're going to see the TIPS surge, because that's the Federal Reserve going back to a cheap money policy. At least in the short term, you'll see the TIPS rally in anticipation of inflation. The VIX hit its highest high today and closed there since back here in April. Now, this is a daily chart. We are well above the 3rd standard deviation Bollinger Band, which leads me to the transports. Now, when trading a market like this, it can be very tempting to go shorting the market. And you know what? You'll probably make a couple of basis points if you short into a new lower low tomorrow. But the counter trend rallies are ruthless when you are in what could quite possibly be a bear market. So you want to wait until you get a counter trend rally before you short the market. So you're shorting into a known resistance level that if it closes above that level, you could stop out with a small loss. So you're managing your risk. Now, if you're thinking about buying, I'll leave you with this thought, this saying, and I live by it. Today's lows could quite possibly be tomorrow's highs. What does that mean? Well, let's take a look at yesterday. If you bought at very close to a support level where we closed yesterday, look at where we opened up today. So the highs of the day were below yesterday's lows. Today's lows may be tomorrow's highs. Don't forget that. So in short, Wait for a bullish reversal day. When you're in a stock market correction, rarely do you wake up and find a day where there's a bottom where the futures are bright green. Normally, that's not the case. Normally, you get a very ugly morning, a very ugly sell-off in the morning, and you get a bullish key reversal on the day, much as what you had back here, back in February. It wasn't a bullish key reversal day. We didn't close positive, but it was a reversal day nonetheless. Another case in point was back here on the 6th of February. This is a very ugly morning. What do? We reversed to close higher. And this marked the bottom. And we began to proceed higher. So do I think we're done going down here? No, I think we're going lower. Big volume to the downside. The Dow Jones Industrial Average closed down below its third standard deviation Bollinger Band. It can go lower. This is panic selling. These are institutions dumping. The Stokes are still declining. We're not even quote unquote oversold yet on the Dow Jones. We're probably going lower. The S&P 500 daily chart slides right through support at the 2818 level like a hot knife through butter. Volume very high. So in all probability, we are going lower here on the S&P 500. The IWM, a catastrophe. This is nearing oversold levels. We have RSI now down below the 20 level. Volume very high. I think that the IWM is very close to being bought. And even when you take a look at the TZA, and I don't mean bought as an investment, I think as a short-term swing trade, yes. Now, the TZA is very close to resist. As a matter of fact, it's into resistance. This is a leveraged ETF that puts you short of the Russell small caps. It's very overbought relative to its third standard deviation Bollinger Band. RSI above 80, and it's probably going higher. So in the back half of the video, I'll talk to you about the trade I'm thinking about putting on here as a short-term swing trade using the TNA, which is the long leveraged ETF for the small caps. More to come there. Let's take a look at the banks. The banks begin reporting earnings on Friday. Your money center banks report earnings late this week and into next week. Then the week thereafter, you have the regional banks that report. So it's going to be all about the banks for the next couple of weeks. Now, the XLF really got clobbered today. We were watching the XLF, looking at this resistance, was also holding support. We didn't buy. We waited for a breakout, and thank God that we waited because it just absolutely collapsed today. Remember last night we spoke about Stokes possibly rolling over, and they are now rolling over. Volume, very, very heavy. Let's talk positions. NUGT, let's update this. Okay, the NUGT, we added more today, and the reason is that we saw a bullish reversal bar and the dollar broke. Now, we did close slightly off the highs of the day, but still, really an outstanding day with volume that rose. Now, what we're looking for here is a breakout. Let's add another line here. At a bare minimum above, let's call it 1441. The reason is that we have this upper band of resistance here in dotted blue. But you know what? Right after that, you have this stiff resistance level. I would rather wait until 1441. Now, RSI, note we have a cup. Handle formation. No breakout yet. This is a concern. I have these arrows up here, not because I see anything that's positive. I don't. I still see two lines on Stokes. For the most part, trending downward below 50, which always has me nervous. On balance volume, we're seeing a real tight consolidation here. Now we have a double bottom, and we broke out today. Now, the weekly chart is really key. We don't have a breakout yet. There's that 1441 number again. Once we get through that level, I think it's a straight shot up into the low 20s. So the 1441 level is our next price target for NUGT. USLV, a down day, new daily low, but we closed off the lows of the day. It's consolidating here. We're not ready to go adding more here. Stokes still correcting. It's a watch. CGC, you know, I was ready at around 3:30, 3:15, around there, to go adding more to CGC, and I said, you know what? This is a weak market, to say the least. Wait until the final minutes of trade, see whether or not this thing gives up its gains. And sure enough, that's exactly what happened. We gave up our gains right at the final minutes of trade. We're up about $1.70, and then let's go to a 5-minute chart. You could see it just fell to pieces. So we'll hold on to it. Relative to the rest of the market, it held up pretty well. RSI still holding its breakout point, retesting support now. Stokes are hooking up now, which is good. And this is what I want to see on the NUGT and USLV. Let's talk now about member stock chart requests. Last night I spoke about, this was for Cynthia, I believe. I'm working off the top of my head here. Apple was positive on the week. And I said the week is early. We need to show a little bit of discipline, a little bit of patience. Let's see whether or not we close up on the week. And as it stands right now, and it's still early in the week, there's a couple of trading days left to go, the share price of Apple is now negative on the week. We have a bearish key reversal on a weekly basis. That's after flashing a bearish key reversal last week. We are now breaking down on Stokes to new lower lows. Same deal here on RSI. So a warning flag is on the track for Apple in a very, very big way. Daily chart. No follow through on yesterday's gain. Remember I said, wait for a follow through. The test is always at the top. Do we break out above 233.47 or do we break down? We have our answer now. We are breaking down. Stokes are now trading down below the 50 level. I would avoid. I think, honestly, on a new daily low, Apple has more catch up to do with the rest of the market. I think it's going lower. We may be looking to short Apple. Sonos Inc. daily chart. I really can't use a weekly chart. Not enough data. So we'll have to go with a daily chart. This is in the electronic sector, electronic equipment sector, and not the most loved of sectors right now. It has been weak the entire month. We did put in new lows since its IPO date, but we reversed to close off the lows of the day. Given the health of the market right now, I'm not willing to go buying a speculative stock like this. I mean, it's all it's been doing since it IPO'd is making lower highs and lower lows. I see no reason why, unless you know of a fundamental reason why it would stop breaking down, especially in light of a market that is really coming under a lot of pressure. Now, if the market begins to show signs of health and you see Sonos rallying and breaking out in advance of a rally in the markets, well then, okay, different story, because now you have a stock that's displaying relative strength. We're not seeing that right now. The only thing that's positive that could be said is that it outperformed the NASDAQ today, but it still closed down. I wouldn't be a buyer here. I would wait for a breakout. I don't think this is a dip buying time. Fitbit. Fitbit is a weak stock. So when you're in a declining market, Weak stocks tend to do what they've been doing the entire year, and that's underperform. Now, in all probability, we're coming down here. I believe it's 451. We'll go to the daily chart in a moment. 451 per share. I think we're hitting it. And I think in all probability, it's going to break. Daily chart. All right, so this is a stock that has RSI 26.65. We're in a weak market. In all probability, we're going sub 20 here. And to do that, we would need to get down below 4.51. So I'm actually becoming interested in Fitbit as a short-term swing trade because I'll bet there's a lot of shorts in the name and they're just waiting to get squeezed. They're going to fall asleep at the switch here. We'll wait for RSI to come in well below 20. We'll wait for the volume bars to dissipate. We'll wait for a bullish reversal day, and then we'll buy it, just as like we plan on doing with the TNA, and treat it as a short-term swing trade, but not an investment. Alibaba, weekly chart. Notice how we're doing high-level view charts here, meaning the weekly charts, monthly charts. It's because I don't want to get too focused on the daily charts to formulate a decision. I want to begin with the weekly charts because the weekly charts will illustrate to me where I have support. Now, you could argue that this low back here in June of 17 will act as support. Maybe. It doesn't have a ton of history here. So maybe it will, maybe it won't. My guess is that we're coming down here to the 110 level, possibly to the 114, 115 level, where you have more historic support. I would not buy these shares right now. Daily chart. So RSI is at 23.59. It's getting oversold. We will probably pop here soon, but that will not spell the end of this sell-off. I still think that we have more downside here. So while it's interesting as a long, it's not ready yet to be bought. And honestly, it's a little bit too late to go shorting it from a risk to reward perspective. The next chart up, Caterpillar, weekly chart. So what we have here is a brutally ugly chart. And why is that? It's because we broke out back here in September, consolidated. We did a retest of the breakout point. Nice, good stuff. During the week of October the 1st, we attempted a follow-through rally, which failed. This week, we are now breaking down below key support. So what we have here is what I like to call a breakout point failure or a bull trap. Call it sardines and mustard sauce. It doesn't matter. What it means is that this is a failed breakout. And when you get a failed breakout, technicians just go nuts. They lose confidence. So if we close back down below this lower band of support by 4 p.m. Eastern Standard Time this coming Friday, look out below for Caterpillar. It'll be my bet that we are going lower to at least the 140 level, and in all probability, we are breaking that support level because this is serious technical damage. Daily chart. All right, so the daily chart, here are our Stokes down below the 50 level, all ugly stuff. Every time we get this situation on Stokes, we get the follow-through, the logical result. Even though we had a bullish key reversal here on the 8th, it meant nothing. The Stokes were in decline, and it failed. You see it all the time. Volume rose today. I think we're going lower here. And in fact, if you take a look at this W formation, this was a setup, a summer setup, which should have sent this a lot higher, this W formation, the pivot point at 146.70. Guess what we did today? We broke it. This is now negated. Months of consolidation negated. What takes months to build only takes days to take away in a correction. Google. All right, so everybody knows my thought process, my opinion regarding Google, Amazon, Netflix. They have allowed left-wing ideology to so permeate their business as to charge corporate malpractice. This is a company that has every reason in the world to go up because it has a monopoly. The only reason why I use Microsoft search engine at any given time, which is Bing, is to enter Google to get to Google, right? It has a monopoly, and all it's doing is giving the government every reason in the world to come in and to tear it up. For that reason alone, I would avoid these shares. On a technical basis, the shares have been weak since the summer. I've been talking about it. You can go back to my YouTube videos back in August. I said they are slicing their own throat. Not just Google, but all the Web 2.0 stocks, including Apple. They are slicing their own throat. They're allowing ideology to get in the way. They're showing topping action. Netflix was already going into correction. Facebook was already going into correction. Google was just barely holding on until the week of September 4th, and then it broke. But the signals were there. All these topping tails, these wicks, shadows, whatever you want to call them, were implying that rallies were being sold, the big money was leaving, and you had to step aside. This was the market sending you a signal. So what's the where to from here for Google? Well, we already sliced through July support. This is a weekly chart. That could change by Friday. We can close back above it. But I think that for rock solid support, we need to come all the way down to the $1,000 per share mark. And that's where I think we're going on Google. Look at these Stokes. Horrible. Absolutely horrible. Daily chart. All right, so on a daily basis, we're trading down below the third standard deviation Bollinger Band. If we pop here, I wouldn't be the least bit surprised. That pop should be shorted. I think we're going lower here. If we do make a new daily low, in all probability, we're coming down to the 1063 level in a heartbeat, and then we will probably bounce. But here is the ultimate price target for Google. Right down here. I think it will go sub 1,000. I said 1,000 before. I think we're going sub 1,000 to 984, 990, and perhaps we'll get a bullish key reversal off of that level. But right now, I would avoid. Let's talk gold. We've added more to our gold mining position because it showed relative strength. Now, all is not well with gold and the gold miners yet. They still have their problems. But they did show relative strength by closing up today. The miners closed up. Gold closed up. Volume dropped off a bit. Stokes is still declining. So this haunts me. So while I am bullish on gold, I'm not ready to go all in yet. I've already gone over with members the reason why I am being cautious despite the fact the gold miners closed up today. And we already discussed when we would look to add very aggressively to our gold mining position. So if you're not currently a member, I discussed it on Market Wrap, and that is posted in the members area if you'd want to join. The TNA daily chart. Now, I spoke about this with members earlier on Market Wrap. The TNA puts you long of the Russell 2000. The Russell 2000 is now sitting with RSI below 20. I think it can go lower. So we'll be looking to open up a swing trade on the TNA. Certainly not an investment, but a swing trade on the TNA. It's a leveraged ETF. If you don't like the volatility, you can always buy the IWM, far less volatility, 3 times less volatility. But I still think we're going to make lower lows here. I am debating a price point. Once I come about that price point, I will share it with members. Take note of Stokes, rounding top below 20, ugly. Big, big volume. And that is it for this evening, folks. If you're watching these member stock chart requests on Market Wrap and you're a member, continue to enter your symbols on the ticker cloud. Right now, it's all about how we're managing our positions. Net, we had a good day today. The reason is because we were properly positioned. We had a lot of cash. We were short. We covered those shorts. And now we're looking for opportunities as they arrive. And if you're not currently a member, there's a 2-week free trial. You can always cancel at any time. Everybody have a great night, and I will talk to you tomorrow. Be well.